Hi, I'm Amanda Hahn. I am a CPA by day and real estate investor by night. And today I am joined by one of my favorite clients and the all-star from BiggerPockets, Brandon Turner himself. And today we're going to be talking about lazy 1031 exchange.
Traditional 1031 with those timelines can be just hell. That 24 unit, which sucked, it made no money, it was awful. Why did I buy that? Because I was trying to do a traditional 1031 exchange and I had 45 days to identify a property and I was on day 44. The stress was immense. And so I had to find something to buy or it was going to cost me like, I don't know, it was like $100,000 in taxes.
So I think, Brandon Turner, you don't need any introductions, but if you want to, let me turn the tables over to you so you can tell people what they want to know about you.
Yeah, my name is Brandon Turner. I'm a real estate investor by day and Batman by night. I buy real estate. I was the host on the podcast for a long time, BiggerPockets podcast. I started a company called Open Door Capital. It shot to the moon. We now have 13,000 units and have raised $400 million from investors. Many of them have invested with us using lazy 1031 exchanges and actual 1031 exchanges. And so that's why we're talking about that today, because raising $400 million through that is a cool thing to do. And you can do it as well if you're watching this. You can actually raise money from people potentially that way, or you can put your own deals into it. Amanda.
Yeah, I know that you love to talk about how lazy you are, right? In general, like you want to do things the easy way. And that's, I think we're all lazy to some extent. So I think you're the perfect person to talk about it. So yeah, before you were, real estate superstar and you were working at BiggerPockets, growing your own portfolio, I know you and I worked together on 1031 exchange. And for those of you who don't know 1031 exchange, I think about that like the game of Monopoly, where you buy a couple greenhouses, trade up to a red hotel. And the 1031 basically allows us to do the same exact thing, but without paying taxes. So there are a lot of different rules that you have to meet in terms of, when do you identify properties, what you actually buy, how much loan you have to get. So there's quite a bit that is involved. Maybe, Brandon, you can share with us earlier in your journey how you utilize 1031 exchange to build your wealth.
Yeah, I'll give a couple of specific examples. I got some cool ones. So I bought this house. It was on Pacific Avenue, I think, out in Aberdeen, Washington. It was a nasty little house. I bought it. It was a duplex, fixed it up, and held it for a number of years. And then I sold it, and I was going to make like a $50,000 profit on this. And I'm like, this is great. And then I was like, I got to pay a bunch of taxes on that and, recapture depreciation and all that fun stuff. So I talked to Amanda. She's like, no, you don't. We're going to 1031 that. So I take it and I sell it. At the same time, I actually sold several properties and I ended up buying a few different things actually out here in Hawaii where I live today. I bought a fixer-upper triplex that I bought, and then we bought some condos that were much more expensive, which is one of the rules around 1031 exchanges. I don't know if you want to go into that, Amanda, but we bought more expensive stuff using several 1031s. So I went from like that $50,000. I'm actually selling one of those properties. I'm going to have to probably 1031 again, unless we do a lazy 1031, which we'll talk about. And I'm going to make $500,000. So I took that original 50, turned it into $500,000. The condos that I own here produced around $10K a month each in passive income. And I had 1031 into those deals. So I didn't have to bring my own money. I just took the profits from previous deals. So now I got these two condos, so $20,000 a month in passive income, and really passive. Like I don't manage them. It's pretty darn passive. That's why 1031s are so great. Now, if I sell these, and I might sell the condos because I want to take the $1 million of equity that I've built in those, which is legit number, and the $500,000 from the other property. Now I'm going to have over $1.5 million to put into something else. And so I can just repeat the process over and over. And it's just making me ridiculously wealthy and financially free. That's the power of a 1031.
One thing that people don't know a lot, I know we all think about, 1031 exchange a single family to another single family, duplex for another duplex, but you can actually 1031 into different asset classes too. Maybe you want to share about how you 1031 exchange into, I think, one of your first mobile home park investments, right?
So I had a 24-unit apartment building that I'd bought in that same town, Grays Harbor County, Washington. 24-unit property, sold it. I think it was $200K in actual gain there I made, which was great. I mean, for a 27, 28, 29, whatever it was at the time. And I took that money and I wanted to buy something else. So I ended up actually buying two different things. I bought a mobile home park with some partners and I bought another apartment complex. So I went from one 24-unit apartment to another 24-unit apartment and a mobile home park. Now, the 24-unit that I bought that, like the new 24 unit was a terrible investment. It was awful. I made no money. We ended up selling it a year later for basically break even, but I 1031'd again. But the other one, the mobile home park, ended up being an amazing investment. I 1031 into this park. I partnered with a couple other people on it. We did what a tenant in common, which allows us to 1031 into kind of a joint venture. I don't know the right terminology there, but we bought this mobile home park. It was great. And that was my very first mobile home park, which led to now 6,000 mobile home pads that we have now. And that was the first 50. Thanks to a 1031.
Yeah, it was funny. I just thought about that when you were talking about your, first 1031. And I was thinking, hey, I think Brandon's first mobile home park was also a 1031 exchange. And so it's really amazing to see how you can, we're not limited to one asset class. Like you could have 1031 into a self-storage or a commercial building. The possibilities are really endless. If we think about how, we can have all this buildup of equity, sell it, you've already taken all that depreciation. There's no recapture. It's really such a powerful tool. But I think it's really important to understand that 1031 doesn't just happen magically. I mean, there's a bunch of rules you have to follow. You have to have an intermediary. You need to have a good CPA to kind of help you analyze how and whether to do it. You have to identify what you're going to buy within 45 days of selling your current property. And then there's all these numbers requirements, like you have to, if you want to defer all the tax, you have to buy something that is the same or higher in the price of the asset you sold. We have to have same equity. So they're, as amazing and like sexy as 1031 exchange sounds, but there's definitely like a lot of rules surrounding that. And I think that's where the lazy methodology sort of comes in.
Yeah.
Because for me, at least, I think a lot of our clients we see, especially people who've owned real estate for quite some time, when they sell a property because they don't want to manage it anymore, and they don't want to pay the tax. They want to get into more, bigger and better deals, but without them in the business. And so this is, I think, how we came up with this lazy 1031, where, you're not doing the traditional route of identifying within a certain amount of time or having an intermediary, but you simply just buy more real estate in that same year and use tax strategies like depreciation and such to offset the gain on the one you sold. So, and I know for you at Open Door Capital, you guys, like you said earlier, deal a lot with 1031 exchange the lazy way. So maybe share some of kind of how that all works and why people would consider doing that.
An actual tangible example of why I'm such a big fan of the lazy model. That property I told you earlier, I sold my 24 unit and then I bought a mobile home park and another 24 unit. That 24 unit, which sucked, the one that it made no money, it was awful. Why did I buy that? Because I was trying to do a traditional 1031 exchange and I had 45 days to identify a property and I was on day 44. And I was like, I'm going to have to pay all these taxes. And I didn't even know about the lazy model. So I was like, I'm going to pay all these taxes. I have to buy something. The stress was immense. And so I had to find something to buy, or it was going to cost me it was like $100,000 in taxes. And I was like, I'm going to lose half my profit just by taxes. I don't know if it was that much, but it was a lot. So I bought a property that I probably wouldn't have bought otherwise because it wasn't quite good enough. It ended up being not a great deal. And so a traditional 1031 with those timelines can be just hell. And so the lazy model allows you more time, it depends on what time you sell in the year, but as long as you can buy something the same year, you can offset it by the new deal.
It's so interesting you brought up the fact that, it wasn't a really great deal when you did that 1031, because we see it all the time. And there's actually research that shows when people do a 1031 exchange, that they're overpaying on the purchase price of a property on average. I think it was like 5 to 7%, because, you're sort of stuck. And if the seller knows you're part of a 1031 exchange, they have that leverage and that negotiation power. So, but yeah, I do think that for what we see a lot is people are like, hey, I want to get into better deals, but I just don't want to manage it. Like, I'm done with managing rental properties, but I still want my money in real estate. I want to defer the taxes. And let's be honest, sometimes, you might be able to get into a larger property, but maybe you don't have enough income anymore, or you don't have the right W-2 income. So you maybe can't get a loan to complete that 1031. And I think that's also another area where the lazy strategy comes in, right?
That's a really great point. Yeah. If you just got the money, but
I guess you talk to investors a lot. Are there any concerns or questions when people talk to you, hey, I'm interested in investing in Open Door Capital? Are there any hesitations if they're trying to use a 1031 exchange that you come across pretty frequently?
I think a couple things come to mind. One, sometimes people don't like to go from active to passive. They've been involved and they like being involved with everything. And so then they're going to go and jump and invest their money with open door capital. Like, wait, I can't pick the paint colors. I can't deal with Miss Johnson in 804C who's not paying her rent. Like sometimes like people like not being involved, but other times they really struggle with that. So like learning to let go and trust is hard for some people. You know, if they want to do a traditional 1031 exchange with us, we just don't take small 1031s because they're complicated and we have to go the tick route. And it's a complicated process and costs a lot of time and money from us. Sometimes we just can't take 1031 money. If it's $1 million or more, then we'll definitely have that conversation. But otherwise, we just push them towards the lazy 1031 kind of model. But another topic to bring up there is the type of deal you're going to go into. Matters in terms of the depreciation you get, right? Different asset classes get different levels of depreciation, right? So a lazy 1031 into mobile home parks is probably way better than a lazy 1031 into maybe an apartment complex. I'm not saying you can't do either, but am I right in that thinking? Because you get way more depreciation on certain asset classes than others.
Yeah, for sure. I'm so happy you brought that up because we don't talk about that frequently, right? Because when we say investing passively in someone's deal and we think about the word syndications, we always just think of an apartment building, right? That's traditionally what comes to mind. But the word syndication itself is a generic term. So syndication could be in an apartment, it could be in a mobile home park, it could be a self-storage, and each of those asset classes have different depreciation benefits. So you're right. I mean, why is the mobile home park good? Because the land improvements are significant. You get depreciation. Why is the apartment good? Well, a lot of number of doors. Each of those have cabinets and appliances that we can take faster depreciation on. So yeah, if you're thinking of a lazy 1031 into a syndication, you'd want to know what kind of asset it is. It could be like a loan fund, you know, where there's no depreciation, and then the strategy will not work because you're not going to get depreciation if you are doing a lending type of syndication. And the other thing you brought up that was really good is you're saying sometimes people don't want to be passive. They still want to be active. And that works well also in a 1031 exchange. You know, today we're talking about using a passive syndication as the strategy in the lazy 1031, but it very well could be just you decide to buy another apartment building. As long as you do that within the same year, you can use the same 1031 cost segregation or lazy 1031 cost segregation strategy. It does not have to be a syndication. So two really great points.
There's a little talked about phrase in real estate, which is one of the most powerful math concepts in the universe, and that is return on equity. Return on equity means that what's the return you're getting, the yield or whatever you're getting compared to how much equity you have in a property. People love to look at return on investment. So I invested $100,000 into the deal and I'm making $10,000 every year. Okay, great. I'm making 10% cash on cash return, my cash on cash return on investment. But if you've got $1 million of equity in that property, and you're making $10,000 a year, you're actually making 1% on your money. Because if you took that and sold it and put it into something that makes 5% on your money, you just went from 1% to 5%. You literally 5x your income just with one change. And if you can do the 1031 to get there, you can dramatically increase your thing. There's a quick story I'll share. Is I was doing a consulting call with a guy one time who owned a bunch of real estate. He owned maybe 30 or 40 units. And we're looking over his portfolio and I'm just trying to kind of help him figure out what to do next and how he can retire. And he said, I want to retire in the next 5 years. I said, great, let's talk about that. And so we're looking at it and I'm like, let's run a return on equity calculation. We did that. He was on average making 1% on all his equity. I simply showed him the math. I said, so if we just sell this property, this one, and you could make just 6% on a deal, like in terms of like cash and cash return, you can retire next month. And like as soon as the deal's done and stabilized, his jaw hit the ground and he ended up doing that. He ended up he thought he was years away from retirement when he was really months away from retirement because of a return on equity. So he just sold it, 1031, bought something else, made a higher return, and boom. Now the question I'll ask you then, Amanda, is when should a person then sell? Should we try to aim for the earliest in the year possible to give us the most amount of time then? Is that the strategy?
So from a planning perspective, the earlier you plan ahead for the exit of a property, the better it is. So if I sold something in January, I have 11 months to figure out how I'm going to 1031 or lazy 1031 or whatever strategy you're using. Yeah, but if I'm selling in December 1st, I'll get my cash end of December. There's almost no time to do it. The other thing I wanted to touch on just real quick is a lazy 1031 works really well for failed 1031 too. So we have clients who get into 1031, unlike you to, buy a bad deal. Maybe you just say, hey, I'm walking away from this deal. Well, now guess what? I got some tax issues. Let me then consider a 1031 exchange to rescue this failed opportunity. I love the story you shared about the return on equity. So I actually created a term for it. Don't steal it because I know you like to steal my terms. We call it lazy assets.
Too late. I already stole it.
All right, guys, you heard it here from me.
So guys, I have this new term. I call it lazy assets, and it's a brand new thing I just invented. I'd like you to all know about it, but Amanda's going to tell you about my idea. Go ahead, Amanda.
Yeah, so lazy assets, when we work with clients on planning, we look at their whole portfolio and we're doing the same thing. We're saying, hey, here's all this equity here that's doing nothing for you. How do we tap into it? Is it the sale? Is it the 1031? Is it a refinance to tap into those equity and be able to utilize it? So I love that you shared that with us. I know, Brandon, you and I can talk for hours and hours and geek out on all this real estate and tax stuff, but I wanted to find out, like, where can people find you? I know you're all over everywhere, website, social, Better Life, but where can people find you?
They can't. I'm Batman. They can't find me. You can find me at Beardy Brandon on Instagram. Go follow me there. Beardy, beard with a Y at the end of it. Beardy Brandon. And yeah, I've got now a podcast where it's a little more general personal development called Better Life, the Better Life podcast with Brandon Turner.
All right. Well, I know we shared a bunch of information, some advanced strategies. If you're looking for more tax tips, definitely check me out at KeystoneCPA.com. We have a free tax savings toolkit. We can get a lot more strategies. If you're looking for daily tax tips, best place to find me is on Instagram. And if you liked what you heard today, you want more amazing content on taxes and real estate, definitely like and subscribe to the BiggerPockets YouTube channel and check out BiggerPockets.com for a lot of great resources. And be sure to drop any comments, chats, what you think about Brandon Turner in the comments below, and we'll make sure to address those.